Entertainment play. Shares of Bowlero, the world's largest bowling operator, up more than 20% this year. Yesterday, the stock closed at its highest level since going public via SPAC in December of 2021. Company CEO Thomas Shannon was on Mad Money with Jim Cramer last week talking about their fortunes. Listen.
I think we're the #1 de-SPAC of 2021. We're a real company, Jim. I mean, we broke through $1 billion in revenue in December. That felt really good. We started with $1 million a year in revenue when I bought the original lanes, and now we're $1 billion. 353 million of TTM EBITDA. We're firing at all cylinders.
My next guest just initiated Bowlero with a buy and a $22 price target. Jason Tilchen is an analyst at Canaccord Genuity. I mean, this must be a fun job. Do you have to do channel checks, Jason? Welcome.
Thanks for having me, Kelly. It's actually funny you say that. We're bringing the whole research department out to a Bowlero center next week to experience it in person after seeing the story told through our report. But it's really unique, as Tom said in the clip that you just played, to put out more than $1 billion of revenue over the past year. Well ahead of what they projected at the time of going public, which is sort of the opposite of what you hear with most of the SPACs that went public in 2021. I think that's one of the reasons why, as he said, it's one of the best performing SPACs that debuted that year. Yeah,
and that alone is worth highlighting. It really is, because a lot of people have thrown out everything related with this. Why do you think they chose that? I mean, in retrospect, should or could they have done an IPO?
They probably could have. They had more than $100 million of cash on the balance sheet at the time they went public. It was really more to give some liquidity to the private equity investor that came in back in 2018. But ultimately, this is a business that is really quality. There's strong growth in the top line, both organically and inorganically. And then on top of that, really strong margins inherent in the bowling business model.
It was also interesting when he said, their average customer is a six-figure household, and he has bowling centers in the suburbs, he told Jim, that are doing $10 million. What differentiates them from your typical mom-and-pop bowling alley?
Yeah, it's really amazing. When you talk about bowling, the stat really surprised me when I first heard it, but it's the #1 participatory sport in the U.S. More than 67 million Americans bowl annually. And I think one of the things that really stands out is just accessible. It's affordable. It's located close to home. People of all ages and skill levels can participate. And because of that, you're seeing really strong demand, especially coming out of the pandemic. And one of the things that is unique about this story, there's 328 centers across the country. They're 7 times bigger than the next largest competitor, but still make up less than 10% of the total bowling alleys that are in the U.S. So there's really still an opportunity ahead of them to continue to acquire new centers and put their operating playbook to work.
Yeah, I mean, a ridiculous question. It sounds like they should just take over all of the bowling alleys at this point. Would there be any antitrust concerns if they tried to do that?
I don't think. Well, it would be a lot of work. There's still 3,500 independently owned centers across the U.S., which is, as I said, about 10 times the amount of centers they currently operate. So even though they're much larger than the next player in the space, antitrust really shouldn't come into play here. And what's really special about this story is that the management team has been together for more than 2 decades. So they've developed a really repeatable operating playbook. When they go in and acquire a new center, they can double the margins within the first 90 to 120 days. And then they go in and they make further investments on the CapEx side to improve the decor, install arcades, which are actually their highest ROI investment, and also full-scale renovations of these buildings.
Okay, I took the kids. All they did was the arcade, Jason. They just, I was like, they're just punching away at it and spending. So the arcade is the real cash generator here?
The bowling is also a cash generator. The bowling has 100% incremental contribution margin. The food and beverage is about 70 to 80%, and the arcade's about 90%. But the low-hanging fruit there is that there's still no arcade in about 65 of Bowlero centers. So there's an opportunity for upside to current consensus as they add more arcades, things like that, and upgrade their centers.
I find this totally fascinating. Thank you so much, Jason, for coming on, getting into the nitty-gritty with us. We appreciate it.
My pleasure. Thanks for having me.
Jason Tilchen, Canaccord Genuity. That does it for The Exchange, everybody. For more of my thoughts on the market, you can always sign up. One easy step, cnbc.com/newsletters, or hit that QR code on your screen. And coming up on Power Lunch, President Biden is said to announce a plan to increase taxes on those making $400,000 and more. But one detail creating some controversy. There's Tyler getting those boxing gloves on. I'll join him on the other side of this quick break.